OG Macro AG here. Chinese billionaire just bet $300 million against silver. Bianing, low-profile Chinese trader who made nearly $3 billion from bullish gold trades, placed Shanghai Futures Exchange's largest net short bet on silver, now worth about $300 million. His short position totals roughly 450 tons, 30,000 contracts. Silver's recent 16% drop boosted his paper gains. But here's what's happening simultaneously. While this Chinese billionaire establishes his short position, the Trump administration convened 54 countries to address critical mineral supply chains and pricing mechanisms. J.D. Vance and Marco Rubio hosted 54 countries for critical minerals ministerial meeting. When they use words critical minerals, understand this is code for physical silver. President Trump is not going to allow China to corner the silver market. The global structural silver supply deficit can only be alleviated through higher prices, increased production, or decreased demand by cutting off Chinese access to Western metals. Trump administration just fired all three silver weapons at China simultaneously. Current prices as I'm recording, silver Western spot $70, Shanghai spot $81, Shanghai futures $99, Shanghai premium $11, gold $48.08. Before we move on, I've received comments and messages asking why I called out that 87 to 90 zone as resistance on the paper market. And look, we saw 3 rejections there. Price has now pulled back to around 71. So, if you'd like me to cover the technicals in detail, comment below. We can definitely dive into that occasionally, though not in every video. For long-term investors and physical stackers, I'll say it again, this is pure noise. But if you're trading paper, listen up. I've said it 100 times. If you're over-leveraged, sizing too big, and trading without a plan, these markets will eat you alive. You need a solid strategy and ironclad risk management, especially trading with leverage in these volatile conditions. Look around. Everything's dumping right now. Stocks, crypto, metals, everything. If you're really here to learn and you're finding value in what we do, hit subscribe, drop a comment with OG John AG, and let me know, should we break down these technicals in detail? Not every video, but when it matters. At the ministerial meeting, J.D. Vance emphasized that despite focus on digital and tech economies, real physical commodities remain fundamental. He noted the room represented roughly 2/3 of global GDP and stressed the need for greater independence and self-reliance in critical minerals. He then addressed current market conditions, stating that international critical minerals markets are failing to create sustainable domestic industries or secure supply chains. He pointed to concentrated supply chains and persistently suppressed commodity prices influenced by forces outside individual nations' control. He acknowledged that mining projects frequently stall and fail due to erratic, unpredictable pricing that makes consistent investment nearly impossible. The stated goal is to stabilize pricing to enable domestic supply chain development. The implication is clear. The U.S. government recognizes artificial price suppression in critical minerals markets and is working to address it through policy. This represents official acknowledgement at the highest levels that current market pricing mechanisms are dysfunctional and require intervention to support strategic domestic production. Now, let's talk physical reality. Australian bullion dealer City Gold halts silver sales due to global silver shortage. Retail sales temporarily paused due to global silver shortage, not temporary demand spike. Actual shortage forcing dealers to stop selling. India's MCX hikes. Silver margins 7%, gold margins 3%. Exchanges. Don't raise margins out of comfort. They do it out of fear. If gold were the problem, gold would be hit harder. It isn't. Silver is. High margins equals stress. Stress equals positioning risk. Positioning risk equals too many traders on wrong side. They're not protecting investors. They're protecting the system. Market is telling you what it fears, and it's not gold. Comp Silver Deliveries Report. Another 6 out of 8 delivery notices issued Wednesday. JP Morgan issued 531, stop 239. Total COMEX February silver deliveries rise to 3563 contracts, 17.815 million ounces, 4 days into non-primary delivery month. COMEX gold deliveries 2692 February notices issued Wednesday. Barclays issued 1304. JP Morgan stopped 740. Citigroup stopped 1000. Total February gold notices rise to 32,004 contracts, 3.2 million ounces. Physical demand relentless. But here's the war. Silver trading nearly 80 cents per ounce in backwardation after clears throat historic price slam. Spot silver currently trading approximately 80 cents above front month March futures. Sign of massive shortage of physical silver in market currently. Backwardation means you pay more for silver today than 3 months from now. That only happens when physical is desperately tight and nobody wants to wait. Now the macro picture, everything crashing simultaneously. Crypto market hit record high, market cap 4.3 trillion October 6th. Today, crypto worth just 2.3 trillion, losing 2 trillion market cap in 4 months. 46% of crypto's entire value wiped out since October. Bitcoin just dropped below 2021 all-time high. US stocks falling after weak job data. Nasdaq down 1.34%, wiping 517 billion. S&P down 1.13%, wiping 695 billion. Russell 2000 down 1.5%, losing 47 billion. Labor data terrible. Initial jobless claims rose to 231,000 versus 212,000 expected. Layoffs increasing. January job cuts highest since 2009. Companies announced very few new hiring plans. When layoffs rise and hiring slows together, leading indicator of economic weakness. Markets pricing that risk now. US dollar dumping fastest pace since 1980. Dollar now second worst performing currency across all G10 countries. Just 1 year ago, strongest. Past 3 months, most G10 currencies gained strongly against dollar. Australian dollar up 8%, Swedish krona up over 10%, New Zealand dollar up more than 5%. Why? Rising political uncertainty in US. Trade policy aggressive and unpredictable. Tariffs imposed repeatedly. Markets pricing risk of broader trade war. Creating Sell America trade where global investors reduce US exposure. Capital flows out. Dollar weakens. Growing concern around Fed independence. Public pressure on Fed to ease policy raises doubts. When markets believe political influence could push easier policy, confidence in dollar falls. Rising concerns around U.S. fiscal deficit. Government debt continues increasing. Large-scale spending raises long-term stability questions. Higher deficits historically put downward pressure on currency. Ongoing trade tensions reduced foreign demand for dollar. Many countries gradually shifting away from dollar exposure, moving capital into safe haven assets like gold and silver. Treasury Secretary Besant acknowledged hearing reports about China developing digital assets backed by physical commodities rather than the renminbi specifically for international payments and reserve purposes. Meanwhile, China's documented actions show a clear pattern. Gold reserves have reached all-time highs at 74.1 million ounces, while U.S. Treasury holdings dropped to 682.6 billion, the lowest in 18 years. China has reduced its Treasury position by over 600 billion since the 2013 peak, while simultaneously doubling its gold reserves. The shift from dollar-denominated assets into physical commodities is measurable and ongoing. Every asset on Earth crashing same time. That doesn't happen in free market, only happens under extreme manipulation. Precious metals market midst a fight between banksters still shorting gold and especially silver and overwhelming global physical demand. The precious metals market continues to show dysfunction between paper pricing and physical fundamentals. The coordinated smash of derivatives in silver and other critical minerals was timed right before this critical 54-country meeting. We are witnessing coordinated worldwide reset in critical minerals from discovery to market into production. This wasn't random meeting hosted by J.D. Vance, and Marco Rubio wasn't just table setting for trade deals. It was planned and coordinated. No doubt coordinated smash of derivatives timed right before critical meeting. While Chinese billionaire Billionaire shorts 300 million, Trump administration establishing price floor system and restructuring entire global critical minerals market. When sentiment becomes excessively bullish, buyer exhaustion can trigger pullbacks even in structurally tight markets. These corrections have occurred repeatedly since the 2022 cycle, low followed by resumption of uptrends. The current situation shows this tension clearly. Fundamental tightness is real. Physical shortages, dealer halts, backwardation, policy shifts towards supporting production. But short-term positioning became crowded. The Chinese billionaire's 300 million short exchange margin hikes and forced liquidations reflect that crowding. Technical indicators across risk assets show deeply oversold conditions similar to previous major bottoms, though oversold markets can remain oversold during deleveraging events. The contrast between collapsing paper prices and intensifying physical scarcity creates the classic divergence that defines these markets. Stock market sees most amount of fear in almost 2 months. Volatility everywhere. China and the US are now competing directly over critical minerals markets with both sides implementing strategic policy measures. The meeting with 54 countries. The J.D. Vance statements on manipulation, ending the price floor system. The focus on making critical minerals markets predictable and independent from concentrated control. All of this is the counter-move. While beyond shaming shorts 300 million paper, Trump administration restructuring the entire physical market to cut off Chinese access and ensure domestic supply. 3 takeaways. 1. Chinese billionaire beyond shaming shorts, 300 million silver, 450 tons, 30,000 contracts, made $3 billion on gold, now betting big against silver. But Trump administration fires back. J.D. Vance hosts 54 countries, 2/3 global GDP. States manipulation is ending. Prices need to be predictable. Supply chains need to be independent. Price floor system coming. China will not be allowed to corner silver market. Physical weapons higher prices. Increased production cutting Chinese access. All 3 fired simultaneously. 2. Physical shortage accelerating despite paper crash. Australian dealer halts sales due to global shortage. India raises margins 7%, silver 3%, gold. 17.8 million ounces COMEX deliveries 4 days February non-primary month. Silver backwardation 80 cents after slam. Physical desperate while paper dumps dollar dumping fastest since 80. Crypto down 46%, 2 trillion wiped. Job cuts highest since '09. Everything crashing but physical silver disappearing. Besant confirms rumors of China gold-backed token. China dumping treasuries, doubling gold reserves. 3 coordinated smash timed before 54-country ministerial. Worldwide reset and critical minerals underway. Manipulation ending per official U.S. policy. But sentiment got too bullish. Leverage extreme. Chinese billionaire sees short opportunity. Markets oversold. Gary. Savage says temporary like every correction since 22. Next rally much bigger. Brian London says mining stocks undervalued. Fortunes coming. But short-term pain real as positions unwind. Unresolved tension. Does beyond shaming's 300 million short get squeezed as Trump price floor implemented and physical shortage intensifies? Or does deleveraging continue pushing lower before structural forces take over? Exchanges raising margins, forced selling possible, but J.D. Vance stating manipulation must end. Price floors coming, 54 countries coordinating, physical dealers halting sales, backwardation 80 cents. Who wins? Chinese billionaires 300 million paper short or Trump administration's physical restructuring plus global shortage? Timeline determines if we test lower or if this is the bottom before policy changes everything. Do your due diligence. Understand the risks. Sentiment reached extremes. Leverage is unwinding, and a Chinese billionaire has established a $300 million short position. At the same time, the Trump administration is implementing policy changes through the Critical Minerals Initiative, addressing what officials describe as market dysfunction and working to restructure global supply chains. Physical shortage indicators remain present. Backwardation confirms tightness in spot markets. Know which time frame you're operating in. Invest with logic, not hype. Use your own brain. Don't follow anyone blindly.